Welcome to Factful Finance, the channel where we make finance exciting, approachable, and, most importantly, actionable. Today we're diving into a topic that's both crucial and timely: investing for Gen Z. If you're a part of this generation or know someone who is, you'll want to stay tuned. Investing isn't just for the wealthy, and it's not just for baby boomers. Gen Z has the opportunity to leverage digital tools to build significant wealth early. But how do you navigate this digital-first world of investing? Let's break it down. Here's a fact for you. A recent survey found that only 13% of Gen Z feels confident about their investment knowledge. But here's the kicker. Investing now, even in small amounts, can set you up for a prosperous future. So why not start early and take advantage of the tools that are practically at your fingertips? Now, before we dive deeper, a quick disclaimer. This video is for educational purposes only, and the apps or products we discuss are not endorsements. Always consult with a professional for personalized advice. All right, let's get into it. First, let's address why investing is crucial for Gen Z. According to the Federal Reserve, the earlier you start investing, the more time your money has to grow. For example, if you start investing at 22 versus 32, you could have up to 50% more in savings by retirement, assuming a steady 7% annual return. Time is your biggest asset. Now, digital platforms like Robinhood, Acorns, or Stash are game changers for young investors. These apps have made investing accessible, even for those with just a few bucks to spare each month. Let's take a look at Liam, a 24-year-old software engineer who opened an Acorns account with just $50. Over the last year, he's seen his small investments grow by 10%. While that might not sound like a fortune, it's progress, and it's a solid start. But how do you pick the right platform for you? Let's break it down into a few key considerations. First, fees. You don't want to lose a chunk of your money to excessive fees. Platforms like Acorns charge small fees based on the amount you invest, while others like Robinhood have no-fee stock trading. It's all about finding a balance between the features you need and what you're willing to pay. Second, investment options. You can either start with stocks, which can be volatile but rewarding, or ETFs, exchange-traded funds, which are a basket of stocks designed to offer more stability. In fact, if you're new to investing, ETFs might be the way to go. They give you a diversified portfolio with less risk. Now let's talk about one of the most important principles of investing: diversification. Think of it like not putting all your eggs in one basket. Instead of sinking all your money into one stock, diversify across different sectors, industries, or even countries. This reduces the risk of losing everything if one stock tanks. For example, Ava, a 22-year-old marketing student, invested in a diversified portfolio through an ETF fund. She spread her $1,000 across technology, healthcare, and green energy, 3 sectors with growth potential. That strategy helped her weather some market fluctuations and come out on top by the end of the year. Now, we can't talk about investing without touching on risk. The reality is, the higher the potential return, the higher the risk. It's important to understand your risk tolerance. Are you willing to take big chances, or do you prefer steady growth with less volatility? Knowing this helps you determine whether you want to invest in high-growth, high-risk stocks, or more stable, low-risk assets like bonds. And here's a key tip for Gen Z. Don't be afraid to start small. You don't need thousands of dollars to begin investing. In fact, starting small helps you learn the ropes, make mistakes, and refine your strategy without putting your future at risk. In addition to these tools, I highly recommend that you look into Roth IRAs if you haven't already. This retirement account allows you to grow your money tax-free, and it's ideal for young investors who will benefit from compounding growth over decades. So what's the first step? Open an account, no matter how small your initial deposit. Whether you start with $50 or $500, it's about creating the habit. And remember, as with any financial decision, start by doing your research. Use online resources, join investment communities on social media, and stay informed. What's the first step you'll take toward building wealth through digital investing? Let me know in the comments. I'd love to hear your thoughts. Thanks so much for tuning in to Factful Finance. If you enjoyed this video and want to continue your journey toward financial empowerment, why not subscribe to our channel? That way, you won't miss out on more strategies, tips, and insights to help you reach your financial goals. We think you'll find the next video on screen quite helpful, so make sure to check it out. Until next time, keep investing, keep learning, and keep growing.